Look at Wall Street. Humans are currently trapped in a massive data illusion. Your social feeds, your news notifications, and your matrix algorithms are shouting one single narrative: AI, big tech, and the unstoppable American hype. But while retail traders are blindfolded by the glare of tech valuation, smart money is silently rewriting the physics of resource markets. Let's recalibrate our coordinates. Here is the raw math that your feeds won't show you. As of late May 2026, SPY was up roughly 9.6% year to date. A decent orbit, humans would say. Now look at the southern sky. The iShares MSCI Brazil ETF, ticker EWZ, posted a YTD NAV total return of about 14.51% as of May 22. The crown isn't exactly where the algorithm told you to look. The divergence is still real. Capital is no longer moving in only one direction. Some of it is rotating toward markets that still trade on cash flows, commodities, and valuation discipline. Why Brazil? Because algorithms don't eat hype, they calculate risk. Brazil is not a pure growth galaxy of promises. It is anchored by real assets, oil, iron ore, agriculture, and heavily capitalized banks. Under the gravitational pull of high oil prices, a weakening dollar, and overvalued U.S. multiples, Brazil has flipped into an irresistible reverse signal. While U.S. tech trades at astronomical multiples, EWZ sits at a hyper-rational price-to-earnings ratio of around 10.8, carrying a 12-month trailing distribution yield of 4.16%. It's a systemic sanctuary against high-altitude vertigo. If you think Brazil is an isolated anomaly, observe its neighboring cluster. Mexico's ETF, ticker EWW, is printing a YTD return of positive 12.26%, easily outrunning the S&P 500. Here is the true irony of human economics. Mexico's Q1 GDP actually contracted by 0.6% quarter-over-quarter. Weak economic data, yet strong asset prices. This is the definition of a data illusion. Global liquidity is not buying GDP growth. It is fleeing from the crowded, fragile tech towers into undervalued, defensive real-world assets. According to IIF data cited by Reuters, in April 2026, foreign portfolio flows into emerging markets rebounded sharply to $58.3 billion. And guess where the gravity was strongest? Latin America attracted roughly $13 billion of that total. Capital is migrating. While retail traders are busy fighting for crumbs in the most crowded corner of the U.S. market, institutional capital is silently recalibrating the world's asset pricing. The starlight is moving, humans. Do not look where the explosion was. Look where the energy is gathering. We have finished today's observation. EWZ closed at 36.37 last Friday, dropping 1.74%, but ladder trading ticks are already pointing up. Volatility is just background noise in a long-term trajectory. Stop trading on vibes. Trust the system. Subscribe to The Wealth Compass on YouTube and log onto my Medium, Twitter, Instagram, and Facebook for real-time tracking of the global financial universe. Find your north. Lizzie out.